everyone's piece of the pie, so everyone here, we might be taking a slightly smaller bite over the past
Is
few
that the
years. So
average downturn for Sydney is lasts for, I think it's around 7 or 8
almost
months.
every single state, like where you have the government sector of jobs allocations, it's had a big
In
increase.
Australia, especially in Queensland, but nationally, the economy is propped up by both government policy, we talked about immigration, but also directly government spending.
Okay, this man needs no introduction. He's sort of the godfather of the data-driven property investment movement. He's literally changed hundreds, if not thousands, of lives all across the country and helped the journey of financial education for so many property investors. Someone I have personally learned so much from as well and enjoyed consuming his content all over his YouTube channel and his podcast. And we share a very similar mission to educate people to make better financial decisions and make a better financial future for themselves. And I'm so thrilled to have him here to talk all things property, economics, data in 2024 and the year ahead. Welcome, PK Gupta, the man himself. Hello.
Hey, Rhythm, thank you for having me. Really grateful.
No, my pleasure. The pleasure is all mine. PK, let's just get into it and start talking about market dynamics here in Australia at the moment. So, one thing that I really wanted to pick your brain on is the difference between apartments and houses. So, typically, property investors, particularly data driven property investors, buyers agents, a lot of the demand nowadays is educated around buy houses with good land content. Uh, and more recently, there's been a big spread in the value growth of houses and apartments, and now a big spread has opened up. Do you think that change has maybe should open the eyes of property investors to apartments because there's a value gap that's potentially appearing?
Definitely. Yeah, definitely. I want to be like super like you often get people who are a little bit like spruiking apartments. So I definitely don't want to get on that bandwagon, but I have to divert from the traditional, let's get a big block with a small house on it because it's land that appreciates and buildings that depreciate. I unwillingly or hesitantly needing to go away from that school of thought just for this question because as you alluded to in the last I want to say like 4 years 2019 kind of onwards apartment prices really haven't kept up with detached houses or detached dwellings.
Mhm.
And there's various reasons for that. I think your audience, whom I respect very much, actually, they would understand this concept that in the last decade, 2010 to basically 2018, 19, there was a glut of oversupply in apartments. And so when that happens, prices come down, or at least they don't grow. And it's really hard to sell at that peak of that glut or oversupply. And at that peak, then developers think to themselves, commercially, quite rightly so, that, oh, there's no point creating any of these apartments or more of them, because hard to sell. And then you add COVID with the labor shortages, the lockdowns, you add construction costs increases. Like right now, it's ridiculously expensive to build an apartment complex. And you have a situation in the last 2 years where actually there's a massive undersupply of apartments. And you probably wouldn't hear someone definitely like me talking this way for the last 15 years, but this reality definitely exists. So the question becomes, well, should we divert from that traditional house and not house and land package, but house and land sort of school of thought and buy units? And I think it's really tempting. I think it's really tempting for people who have this kind of super high risk appetite and want to flip an investment in a year or two. We're not talking it's not like they're going to make hundreds of thousands post-tax by flipping an apartment, but they could definitely, very much so make a profit in the short term. But I think you know this better than I do, Reedham. Over the last 30, 40 years, if you understand the longer term trends, it's not that apartments catch up to to houses or detached dwellings in terms of prices. That decoupling of houses and units has been further being exacerbated, decade after decade. So right now we're in this kind of, I would say, cyclical time where apartment prices are likely to rise faster due to lack of supply and also affordability issues nationwide. But that longer term structural trend of Aussies, despite high immigration, still want detached houses, and those grow more or faster on average, generally speaking, than units. That structural broader trend is probably not going away. So I think for long-term buy and hold, lazy investors like me, we still avoid apartments.
Yes, I love that answer. That was so crystal clear. So there's a short-term value opportunity. But if you're investing for the long term, like most investors are, then you'll probably find that that structural gap continues and the capital growth over medium to long term periods, the house will do better than the apartment, even if in the short run, apartments do very well. And we're starting to see that as well. Like I just looked at CoreLogic daily indices and looked at their monthly price growth. And, in every capital at the moment, albeit very marginally, apartment price growth has just started clipping past house price growth. So that was for the latest month. And it's not just a Sydney Melbourne story, it is a Perth, Adelaide, Brisbane, Hobart story as well, I believe. So that is being picked up. And just touching on one more thing that you just touched on, you talked on uh, the supply side a lot there when you said that the capped growth rates between 2010s was driven by the oversupply. You actually didn't talk so much about the demand profile changing or demand coming back down. You're looking at it from a supply side. That's really, really interesting with apartments. So adding some context for our audience here, the supply side of apartments is pretty low at the moment, like apartment commencements. So the things that are actually being built, they're below their sort of 10-year average pretty much across the board. 14% in New South Wales and Victoria, 27% 14% in New South Wales, 27% in Vic, 45% in South Australia, and 64% in WA. So some stats there that just clearly show that we're not building enough apartments at the moment compared to what we typically do. Part of the big reason why we're in a housing crisis in Australia and all the noise around that. But thank you for that answer. I think the audience will really, really value what you've just said there.
Can I just add one more
Yep.
thing? I just think it's really important to add. This is a bit of a educated guess, but I feel going forward, there's going to be more high-rise apartment towers as opposed to small unit complexes being built because the economics of building, like a 10 unit complex, like a three-story apartment block, etc., is just not there anymore. Whereas I know, for example, on the Gold Coast, even though right now, for like the first time in 20 years, there's not enough apartments, there's so many developers just on the sidelines. They've got their development approval ready, they've got their funding ready, they're ready to build a 50-story, tower with however many units, but they're just waiting for prices to reach a certain level, like a watermark where it becomes commercially feasible to
Yep.
actually start digging. So this is a big risk, for those of you who are looking, let's say to buy a unit. The units can be made or they can come out of the ground incredibly quickly en masse, unlike houses.
Yes, yes. So that creates that little bit of volatility and potentially the key thing that you said actually was you may want to sell. You use the word flip when you talk about investing in an apartment. That's really, really interesting. And it does divert investment strategies to potentially looking there. So if you do have that high risk profile, it's something you might want to look into. Perhaps if you have a small budget and you're just starting out and you want to be an aggressive sort of investor, um, you don't have the means to go buy a house, for example. You just don't have enough money, but there's a short-term opportunity to get into the market, and it's going to take you a year or two to save the extra bit of capital that you need to, increase your budget from say 350 to 550. Then this could be something to at least explore because there is a shorter term opportunity there. Yeah, so that's sort of my thoughts on it. And you've sort of touched on a whole like other topic here where one big reason that we've seen is affordability driving markets at the moment. So the affordable sector in pretty much every capital is outperforming the higher end market. Do you think that will continue, or are we starting to reach a point where it's just like, hey, affordability caps are now kicking in markets like Adelaide and Perth with yields compressed so low after such a big capital growth wave that's happened over the past few years?
I wish I knew the answer to that question.
Yep.
Uh, like my honest thoughts, Redem, are there's still a long runway before affordable detached dwellings are fully subsumed. Everyone talks about Adelaide. And of course, even up in Elizabeth, far north in Adelaide, you're paying, almost $750,000 sometimes. It seems ridiculous. So Adelaide is not affordable anymore, and neither is Perth. Similar story in Perth. Brisbane kind of they lost that mantle a couple of years ago, I felt. But Brisbane's really surprised me because it's carried on, even though it hasn't been affordable for the last 1 or 2 years, but it's still carried on. But I think people forget that, and I'm not here to pump any markets, but people forget that there are still other affordable areas that haven't risen kind of post-COVID as much, and that, Victoria is a really good example of that. And I'm not saying that regional Victoria is going to boom or anything like that,
Yep.
but there's still so much opportunity even within that sort of 350 to 500K band that this runway there's some runway. Now, if we have this conversation in 2026 or 2027 and like you can't buy anything under 500K and interest rates still haven't dropped, then I would be really, kind of forced to say there has to be a elongated consolidation period in the Australian housing market where prices have to go sideways effectively, unless, of course, you subscribe to the school of thought that if we keep immigrating money, if we keep importing money, millionaires that is, or, foreign people that are finding a way to bring their money into Australia, then this affordability issue is moot and it doesn't matter. And I think there's already, I know I'm kind of jumping around a lot in this answer, but there's already a semblance of that I get in the market, that it's no longer the average individual or the median person or family that is dictating the housing market. Even in the affordable areas, it's really
Hmm.
top end of town, or let's say the top 20th percentile of money in Australia that's dictating even the affordable areas.
Yeah, that makes a lot of sense. The RBA actually came out very recently here in Australia. It was an off-the-cuff remark, but I found it particularly interesting for property investors, where they said that there's a little bit of a replacement from highly indebted households. So with that, I actually AKA'd that to Sydney-siders, just as a soft proxy, to them being replaced with fellow investors who have less leverage. So this is kind of like a win for the small guy a little bit, where it's just like, hey, look, those with properties and a lot of debt are selling out to some degree, perhaps to keep the lights on or pay their mortgages, and they absorbing big cash flow losses in some of their investments that they may be having in Sydney, Melbourne, etc., paying down debt as a result. And who is actually buying these properties from them? It's actually other investors who you can see that in housing credit data that have less leverage. So, you might be a
Mm.
first-time investor or someone of that like. And you can kind of see this in Melbourne to a degree a little bit because there's been a bit of an investor sellout that is occurring at the moment. You can see it in listing data in particular locations. And some of the replacement of that is from other investors who just have less debt. And credit markets really dictate that a bit because, people with debt can't really borrow as much and people without debt
Yeah.
can borrow. So it's really, really interesting.
And my hypothesis on that, Redum, is that it's probably not going to be a popular one, but people in Australia that have been here for a while, either born and brought up here or been here for like 20 plus years, they're the ones that I think you're kind of referring to as like they've already capped out with their DTI, ratios. They've already got a number of properties or even just one property, principal place of residence. They're kind of maxed out. I really feel that it's these immigrants, the migration effect that's happened over the last 2 or 3 years. I think it's these people, and the immigration these days is different to the immigration of the John Howard era. This time around, the wave is very educated, generally speaking, educated, qualified. They're bringing money into Australia and then, securing really high paying jobs. So it's these people that are starting to invest. And so it makes a ton of sense what you're saying. These guys didn't own any properties before in Australia, but
Yep.
now they're bringing that ability and that latent borrow capacity to be able to do so.
Mhm.
So I really think that it's these people, like the Melbourne example, even though there's a ton of investors selling in Melbourne, Melbourne actually hasn't really fallen that much in value. And it's because of this immigration effect that the money's coming in.
Yeah. Yeah, that's a like economic story that's happening right now. It's a microcosm of the economic story. We talked about it in the housing market, but if you look at it, the expression that I used on LinkedIn, I think today was that everyone's piece of the pie. So everyone here, we might be taking a slightly smaller bite over the past few years. So real incomes or real per capita growth in Australia has kind of been modest or slightly negative for a little bit of time now for the last 2 years. But we're moving forward a little bit modestly. So the pie is getting slightly bigger. And uh, everyone's taking a little bit less. But how's it getting bigger? It's from new entrants kicking in. And those new entrants are coming in with money. We're targeting people from different parts of the world that have good jobs, good education, ability to earn income at a certain age profile. The skilled migrant program has become extremely targeted in Australia. And you touched on another awesome, interesting point. And I looked at this when I worked at Treasury 10 years ago, is we did some modeling on the value that a migrant has in different segments of the migrant uh, program. So back then in the Howard era, it was more driven by family migration. So, if someone comes here, you bring your grandparents, you bring your parents, you bring the whole family, you bring them in.
Yeah.
Really matter if they have a job, you bring one doctor and a whole community of other. My community, the Bengali community here in Australia, that's kind of how we've grown, actually. It's very, very common. That happened from the late 80s to early 90s to the noughties. That was very common. But the change that's sort of kicked in now is it's much, much more targeted, and we've rebalanced the scales to being far more skilled migration versus the family migration here. And that means more incomes kicking in, and it's really helping spurt that growth around.
Yeah, I think it's not really talked about enough. Everyone, of course, it's easy to blame migrants for all the problems. Um, but I think in the political zeitgeist of Australia, there's not enough discussion around how we need skilled migrants, but it's these very skilled, high income earning migrants that when they are coming, they're the ones that are driving these house prices. That's my somewhat informed hypothesis. So we're between a rock and a hard place. We don't have enough skilled labor in Australia and in various industries. That's why a migration program exists. Of course, a migration program should exist in moderation and with the right infrastructure so that we can absorb that migration. But it's really undoing everything that the rate rises have sought to achieve. And
Yes.
it's bewildering to me because what happened in 2022, I think March or May, when interest rates started rising, Sydney, Melbourne came down. But then when Sydney, Melbourne, of course, the most highly leveraged, expensive markets in Australia, at least Sydney and Melbourne to some extent. But then a year later, these markets started rising. I think Sydney, correct me if I'm wrong, Redum, I think Sydney started growing at double-digit rates, annualized.
Yep.
And it was ridiculous. It's like rates are still rising,
Yes.
interest rates, but then Sydney is booming again. I just couldn't make sense of it. Of course, we have a housing shortage, but we have a housing shortage everywhere. Why is Sydney the one that is performing so well? And it was down, for me, it was down to migration. And so what do we do? I don't want to take control of this episode, but the
Oh,
question I ask myself is, what do? We need to bolster the economy. Without this migration, we'd be in a recession right now. Maybe it's a recession we need
mm,
to Australia and its economic um, intentional economic aspirations,
yep.
or if we don't have sort of an intentional strategy, an immigration strategy, then immigration is the way that we're keeping our head afloat at the moment.
Yes. It is a common story, actually. If you go back through the last 30 or 40 years, PK, we have actually had per capita recessions a few times. So if you ask an Australian, be like, when was the last, exclude COVID, when was the last time Australia had a recession? Or you ask a politician, it's a badge of honor in Australia. Like we haven't had it for 30 or 40 years.
Yeah.
1990, the year I was born, 34 years old. That was the last time we had a recession. So I've never in my living experience experienced a recession. And my parents who came here around then have barely experienced it too. So, this is the we're probably approaching the point where more than half the population in Australia has never experienced a recession. At some point, we're going to hit that point if we haven't already approached that. So, but we have had per capita recessions a few times. We had one in 2001. We had one, I think, post the mining boom as well, and we've had one fairly recently as well. And when we're transitioning as an economy, you can almost bank on this. Actually, it's like the way our political system is designed is we fear the negative growth recession so much. And behind the scenes, the powers that be, the ones with the magic powers to slightly tweak things, and this is data that doesn't get that much attention until after the fact. Like it's not like an interest rate where you change it monthly and everyone knows about it. There's a huge announcement. You find out about population stats a little bit later. It's not as newsworthy. But we dial up, we turn on the jet burners to population to keep the numbers positive. And it's pretty much the story of 2022. It's our post-inflation management story. It's like let's bring this inflation down slowly and keep growth positive by pumping up population numbers to keep the lights on in Australia, I guess, or keep the growth figure positive. That's really the message here. It's just a fascinating economic policy movement that Australia has had over an extended period of time, and not only one time, quite a few times actually.
Yeah.
Crazy.
No,
I love that you brought it up.
you're dead right. And I think it's probably not just Australia either. I think it's probably true for most wealthy sort of Western democratic nations around the world. And you see their sort of social fabric changing, whether it's in America, Canada, definitely, UK, definitely.
Yeah.
And it's sort of a healthy tension between what should the social fabric of a country be versus how do we keep this economy alive
Yes, exactly.
in a post-manufacturing, high wages services industry sort of world.
PK, I'm fascinated by this because you currently are in the States and they're going through a big political change that is kind of reverberating around the world. We are very far away from it, but we are feeling the ripples a little bit, and a lot of people talking about it and trying to unpack it all. One thing that I pick up from the States is when I'm looking at the data there is their economy seems to be performing very differently to Australia. Their household sector, the way people feel should technically be a little bit better in the States per person than in Australia. Do you have any reasons why that might be the case? We're operating in a global macro condition with high inflation, trying to bring it back down, high interest rates there too. But their consumer seems to be doing much better than here. But like on the ground, do you have any insights on that?
I have to preface this. I'm no expert on the States, and just because I'm here, we're creating a base here. Also, it's such a big place. Like I'm in the Silicon Valley in California, and it couldn't be more chalk and cheese versus, I don't know, Pennsylvania or Georgia or other places. So it's hard to definitely generalize. But I think one thing that, for all of the woes of the United States, one thing that they've kept is their manufacturing base. Now, I know that manufacturing has been eroding in America, in the United States, and of course, that's one of Trump's, big sort of voting points. His base came out to, America first, all that sort of thing. But
Mhm.
it has to be said that after China, manufacturing, the US is the number two biggest manufacturing hub in the entire world. So that still has manufacturing. It
Mhm.
still has those middle income or middle class, it's still quite buoyant because it still has manufacturing, not as much as before, but it's still there. I'm a firm believer when you have a vibrant middle class, you have a vibrant economy. And of course, we live in, sort of a post-capitalistic, sort of, how do I say, consumerist society. So for economies to thrive, we need consumers to consume locally.
Mhm.
And in America, that's still very much the case because the middle class exists. deteriorating, but because of this manufacturing base, it's still there. And so therefore, when I look at the statistics for the United States, it's not as bad as Canada. It's not as bad as the UK. It's not as bad as New Zealand or other sort of Western democratic peers. What is interesting to me versus Australia is that not only is the US not in a recession, and we can debate, the definition of a recession, etc., but let's just go with this. It's not actually in a recession. Yes, unemployment is rising just a little bit, but on an absolute level, employment levels are still very, very, very healthy. And here's the thing, inflation has come down, right? And I know that the Fed is reducing interest rates, and let's see if under the Trump era inflation will rear its ugly head again. But as we're recording this at the moment, inflation is trending down in the US in a big, big, big way, which can't be said necessarily to the same extent in Australia. So I think one of the key differences, to answer your question, is here the economy is very much driven by the private industry. Okay, whereas in Australia, especially in Queensland, but nationally, the economy is propped up by both government policy, we talked about immigration, but also directly government spending.
Yep.
And I think it's that different, that's sort of one of the key differences between the two economies at the moment. And that means the United States is healthier going forward because you actually have the engine being healthy. You actually have the cogs turning. You actually have everything working really well. Whereas in Australia, the cogs aren't turning anymore. It's like the mechanic is forcing, the car to keep going. You need to get it serviced every month. It's like the government is forcing the economy forward, but without the government, with both immigration, but also their record, government spending, the economy would be in a big, big recession. And I think that's quite embarrassing, actually, for a country like Australia, where, we have all the resources in the world. We have so much talent. We have so much skills, but we didn't have the government, how do you say, agenda to boost the middle class, to boost manufacturing, to boost innovation, to diversify outside of just resources, education, exports, and tourism, basically.
I love that answer. I love the ambition you have for Australia. I share that. Any Australian win, kind of fuels me with pride. And you touched on a really, really cool point. We did this weird thing. This is the economics nerd in me, but we did a weird thing where we like looked at every single jobs market and compositionally analyzed it state by state. So we released a video on that recently, and then for the audience to simplify it, just rank them. And Queensland did come out very, very well. But inside that data, when I was going through it, was the composition of where employment growth is. And the reason why I was looking at this was I was trying to work out where things could track in the years ahead, because the big change that should come about at some point in Australia is a rate cutting cycle might kick in, and being like,
Mhm.
where are the jobs? Where is the employment growth? And where are jobs being cut? And that is something you've just touched on. In almost every single state, like where you have the government sector of jobs allocations, it's had a big increase. And sometimes you get this a little bit when there's been a government change. So in Australia, we had the Liberal Party in charge for 9 years, and then Labor came in 2022, I believe. So when there's a government change, sometimes you have a job creation in the government sector. But it wasn't just in the ACT, which is where you typically see it. And it was definitely there, but it was spread across into all the state governments as well. And the employment growth, you're right, drilled down was coming from the government sector, and things that are household sector driven, they were coming down. Like there's been, for a really good example of this was in Melbourne, where 10% of jobs were in retail last year, but now 9% of jobs are in retail. That's 30 or 40,000 people who have been shifted away from retail. Yes, they're finding jobs en masse because there's employment growth, but 30 or 40,000 jobs gone away, and that's a soft household sector. And that soft household sector is probably the story that you're talking about, where the broader economy isn't doing as well, the middle class isn't doing as well. They've got a little bit less available in disposable income, so they're cutting back, and it's a function of kind of an economy on life support a little bit from the government. So
Yeah,
I just
that's a
love
good
how you
analogy.
pitched it. I love how you pitched it, and you can just give real talk about assessing the Australian economy, and you're coming at it with that US lens, which is cool. Like that's a little bit different. You're coming at it with ambition. That's what I like hearing, which I think
Yeah.
is a little bit of a US lens kicking in, where it's just like when we're in be isolated, being like, oh, are we doing well? Like, the media.
Well, I mean, it's very hypocritical actually of me because, I've made my money in real estate,
Yep.
but real estate is it's the one of the reasons that productivity is so low in Australia. Australia's productivity is like the second worst of all like developed nations. That's crazy statistic,
Yep.
right? And that's because like who are the people in Australia? And of course there's so many. I'm just generalizing. It's so easy just to make money in real estate. Whereas in the US, and of course, I'm once again living in a bubble here in Silicon Valley, Steve Jobs' house is 2 blocks away, etc. But here it's like people I don't want to make any social judgments here, but they're trying to solve big problems. And, by solving big problems, naturally, innovation is a byproduct, and naturally, then, and value a creation, it's accretive in terms of shareholder capital and GDP and all that sort of thing. Whereas a young person, average young person in Australia isn't really thinking that way.
Mhm.
And I know this is not probably representative of the entire United States either. I totally get this, but it's just so easy. You chuck some money in real estate, it goes up, Bob's your uncle kind of thing, right? And I think yeah, it's very hypocritical because I'm in the real estate industry, but we really need to innovate in Australia, and we have some terrific companies. We need more of them. But as with anything, all of this starts with the government, tax incentivizations and reducing red tape. All of this needs to be done. So anyway, that's not really property related, but I thought it's important to mention.
I love that. I'm going to circle that back down to our audience and the individual here. Some of the lessons I'm hearing from this, I feel a little bit inspired just hearing your ambition about what you're sharing, the messages of the values of some of the people that you're connecting with at the moment, and the environment that you're in. Is for a property investor, it's a little bit like bring it back down to the individual, that ambition to go take control over your financial future, to go take control of your own set of circumstances, independent of government tax policies, whatever it is. That's all noise to you. You are the starting point to taking action. So we've done a few episodes on this recently about how we build portfolios out, and the starting point in all of it is actually a mindset element where it's just like you can do something for yourself. You can take control. You can make decisions to lead to a better future for yourself. And at a microcosm level, it is your form of innovation. It is your form of value creation. It is your form of uh, problem solving, obviously in real estate, because it's the audience that we're talking about, but it's you take
Yeah.
accountability, and you can apply that to your broader career and your broader life, and if you're in business.
Totally. Totally. And have that why. What is generating wealth from property going to actually achieve for you? Because having a seven-figure bank account or eight-figure bank account, like that in of itself is not an outcome that is very fulfilling or enriching. It's what are we doing with that? Or if even if it's just quote unquote $50,000 of passive income, that's your goal. When you do achieve that, what are your ambitions with that? I think that is what keeps us on the straight and narrow through all the government policy, hooplas and negative gearing and booms and busts, etc. It's like it's having that clear, articulated why and a real burning sense of belief in yourself. I think this is something that I want to encourage everyone to have, whether it's in real estate or anything else. This sort of thing is rubbing off onto me by the people that I'm starting to associate with over here. And of course, there were terrific people in Australia. And when I come back to Australia, they will still be there as well. But if you associate with people who you know, it's not like they have to be millionaires. It's not like they have to already be CEOs. But if they have a fierce sense of self-confidence and they just break down large, complex problems in small chunks and just every day, not motivation, but discipline. Motivation is transient, discipline is permanent, it's stable. If you associate with these types of people, then you just it's amazing what kind of person you become. So I'm definitely not trying to become a motivational coach or anything, but
You've motivated
these
me.
are the sort of things that are rubbing off onto me lately.
Yeah, that was a good motivational talk there. I enjoyed that. So yeah, that's just the message. Taking this a little bit back to that property investor, that is the message. Take control. You have the ability to do so. Um, PK, it would be wrong of me to not go around the grounds a little bit. People want, our audience want to hear it from me. Our audience would definitely want to hear it from you. They'd want us to talk about it as well. I think they're going to be very, very excited to have us both in a conversation and you on the show. Do you mind if we do just a quick whip around the grounds in Australia? Let's go capital by capital and maybe throw in Northern Queensland in there because we're doing a few. There's obviously a lot of attention there from the audience at the moment. So, can we just quickly talk through your thoughts on Perth?
Perth, I don't think Perth is a one trick pony. I think it's been well proven, and I've been vindicated in saying that it's definitely diversified beyond mining. Of course, mining is still the linchpin. Like, no, we're not kidding ourselves here. But iron ore has been down. It's been down for a long time. It's not at record highs. It's not been at record highs for a long time. Yet property prices still rising in Perth. I think right now the zeitgeist is very much things are turning in Perth. But yes, they're turning, but you have to think about it. If you reach the summit and now you're making your way down, the altitude is still incredibly high. Prices are still rising. It's just that you might be beyond the hump, the fastest rate of growth. So I don't think people should rush to sell in Perth, but I don't think people should rush to buy in Perth either. If you have a sort of timing the market is as important as time in the market type of school of thought.
Yep. Uh, Adelaide?
Adelaide is like, I think it's, that mountain analogy. We're probably down to base camp, or, in a lot of ways we're still on the mountain, It's like if you talk about the Himalayas, we're not in Kathmandu. We're still at base camp. We're not quite down further to where we could go, but the to buy now, and this is the thing, I see a lot of people, whether using professionals or by themselves, they're buying in Adelaide when regions that have literally tripled in the last 4 years. And that tripling effect is,
Wow.
okay, sure, some of them have been owner occupiers that have been forcing these prices up, but a lot of cases just investors piling on top of each other. And so when something has doubled or tripled in a short period of time and now you're buying there, okay, let's high five. You'll make another 50K because we're not down to Kathmandu. We're still at base camp. Prices are still on altitude. They're still rising. But 50K equity in 6 months, and then in 2 years for that to go sideways or have a correction, you can be the judge of whether that's a good investment decision or not. So I'm very bullish on Adelaide over the decade. I'm very bullish on Adelaide long term for sure. It's completely, unrecognizable compared to like 2015 or
Wow.
2016. But I don't think this is the right
Wow.
timing for Adelaide proper.
Yep. I think I love that you touched on the investors jumping on top of each other. We've done a little bit of a, what do you call it? A growth comparison between owner-occupier lending and investor lending. I use this as a truest picture of who is actually buying. I'm using finance data to check on the ground who is transacting right now. And I look at changes in housing finance data as the truest picture of the month that's happening. And Adelaide spat out just an outlier, like a clear outlier where it's just like, okay, owner-occupied growth is happening, but it's less than Victoria. It's less than Melbourne, Sydney in owner-occupied growth. But investment growth, it's almost leading the charts other than Perth. And it's like, okay, the ratio between owner-occ growth and investor growth is very much an outlier in Adelaide. So anyone interested in that, we've done an Adelaide video, so you can kind of go through it. And that's some of that investor story that you've touched on. We're in Sydney. Your thoughts on Sydney at the moment? House prices are going backwards here at the moment. You know, how long do you think that might continue? And yeah, what are your thoughts on the Sydney market in general at the moment?
Sure. Yeah, no one likes to hear me talk about Sydney in a bad vein. I always find that people get a little bit triggered, at least in my Facebook group, for what it's worth. But I remember like in 2021 when we stopped investing in Sydney, people were aghast that I would say that it's no longer a good investment. And since that time, prices haven't really done super well. They've come down, then up again, then now down, starting to drop again. So it's been underperforming the national average. I think to the theme that we were talking about before of markets within markets, below median areas, affordable areas, let's say Blacktown, etc. I feel that these areas, not I feel, my feelings are not really consequential, but the data suggests that these areas will continue doing well. In fact, they've done incredibly well despite much of other Sydney not doing so well. I
Mm.
think until we see a change in the monetary policy, the more premium areas in Sydney, in fact, we're already seeing some of the inner west dropping by 10% already in the last 12 months in Sydney. So I think if you are going to invest in Sydney for whatever reason, you only want to buy there, buy something affordable, buy something with land, as we talked about at the start. You may not get the most incredible growth immediately. It will be at least 30, 40, $50,000 negatively geared. But if your strategy is just Sydney, please buy affordable, unless, of course, you're making millions of dollars, in which case, that doesn't really matter anyway.
That's a good summary. Actually, on the ground, I've noticed that. I participate in some of these markets, and yes, you are definitely right. I'm glad that's being borne out in the data as well. I'd say for some reason, I don't actually know why, some geographical pockets of Sydney appear to be holding ground a little bit, but it does fall into what I call like the gentrification areas, the affordable areas that are still expensive. It's relevant to Sydney siders, but the affordable areas that are still a little bit expensive, but cheaper than what's around them, and have that associated stigma there that seem to be holding up pretty well. It might just be people being forced down with lower borrowing capacities and
Right.
price
One
driving.
stat that your audience will really appreciate, I think, is that the average downturn for Sydney is lasts for, I think it's around 7 or 8 months. So we've just, I mean, negative growth in I think October of 0.1% is nothing really. But if it carries on, which it likely is to do, the average downturn in Sydney is about 7 to 8 months. So yeah,
Yep.
in terms
Uh,
of timing.
I think that sounds about right as well. I think there will be a little bit of a downturn here. We can feel it on the ground. That's not to say Sydney siders are not investing. We are representing a lot of Sydney siders. They're just not investing in Sydney. And I touched on this on a podcast yesterday with the Elephant in the Room that one of the big changes, and I love this, is people are making better financial decisions. And I actually attribute some of this movement to you. You are, I said at the beginning, you're the godfather of this in terms of starting it, and also great buyers agents and other people like you in the field, helping open up the country a little bit, being like, there are other places to invest. And it does make sense to move your money into other areas, especially if the goal is to make money. If you really simplify it like that, that is very, very obvious now, but it wasn't so obvious a few years ago. And now a lot of people know this. So, that is like you talk about impact in that motivation thing. That is impact, the positive impact a lot of this education is having on people's decision making, and I really enjoy that. And I believe it too. I invest in Sydney a lot. I'm a Sydney sider. I think there are many locations better to invest in than Sydney right now. I think Perth will outperform it. I think Adelaide will definitely outperform it. I think those two capitals will, completely outrun Sydney over the next 12 months. Um, and when I talk about Sydney on this podcast, I talk about very specific opportunities that do exist associated with these planning changes that are kicking in. That is
Yeah.
probably the investing opportunity, but really it's fraught with risk. It's for high budgets. It rules most people out, and you can't just go buy a nice plot of land out in the western suburbs and be like, hey, look, there's going to be some zoning change. I'm going to make money. That's not how it works. And that opportunity is kind of closed. So that's just my added lens to it. Melbourne.
Fair enough. Melbourne's a very interesting one. I think right now, I don't think it's any secret. My clients have been investing in probably half a dozen or so Melbourne suburbs for about 6 months now. What I'm seeing, and this is just perfect, just perfect, perfectly honest with you, is that the pockets of Melbourne that is starting to rise in value, and there are pockets in Melbourne that are, some of them actually growing pretty fast. It's really investor led. And I'm not super comfortable with that. I don't know if what you're seeing in your data, Redem, but typically we want to be investing in areas that are starting to rise in value because of owner-occupier activity, as well as all the other data, symptoms and metrics sort of lining up like stars in the sky. Right now, Melbourneites aren't really getting back into the market to live in,
Yep.
in terms of upgrading or buying their first home. But there are some green shoots that are driven by investors. Now, if it continues to be driven by investors, then I would say, okay, well, we've made money in the short term, but that doesn't bode well for long-term sustainable growth. So I'm really hoping that with potential interest rate changes or just a different sentiment that may wash over Melbourne as hopefully the state economy improves, the exodus from Victoria abates, which it already has, the sentiment will change and people will start buying their first home, upgrading, and a lot of these areas will start rising in value because of fundamental substance, people genuinely
Yep.
buying sticky houses to live in. But right now, Melbourne is still very, very weak. I think it's really easy for a lot of professionals to say it's the next big city to boom, but I think we have to see that Melbourne rarely booms. It is actually a bit like Adelaide. It tends to do quite well, let's say 4 to 10% growth over long stretches, like 5, 6, 7, 8 years. It's not like Brisbane or Sydney that more volatile type markets. I mean, Sydney's more volatile than Brisbane, but both Sydney and Brisbane tend to boom and then sort of come down again. Melbourne tends to do quite well for a long time and then just shallow. Like the last 1 or 2 years, it's been just shallow. It hasn't fallen 20%, but it's just been pretty flat. So I don't think I would say I'm optimistic about Melbourne. I think I would say that I'm realistic about Melbourne and that there's money to be made, but I don't foresee a huge boom anytime soon.
Yes, I like that summary. I think that owner-occupier, investor-led comment is particularly valuable. And yes, the data does bode that out. The one thing that we have said is part of it is like reading the winds a little bit in terms of what may change and what might drive that change that leads to the data to change over time. So that's part of the reason why we did that jobs ranking analysis was to look at which sector of employment growth is happening in Melbourne. And yes, it was government led, but the change from lower interest rates, which could kick in, if there's a 1% drop in the cash rate, that should help the household sector increase a little bit. Melbourne's getting more people, so that should create further employment growth, that economic activity, that should then create that owner-occupier demand. And then the data associated with it will be there's more people fighting over it and then create that growth cycle that we're talking about. But
Yeah.
that is a little bit predictive, if that makes sense. It's like a little bit guesswork. It's not relying so much on the data. It's like this could happen and then the data could change. That's what Melbourne looks like at the moment. And in one of our recent pods, we just talked about opportunities that I would look at. And the first one in that was Melbourne, but it was talking about you have to roll your sleeves up, metaphorically, to be like, you may have to do a little bit of the work because the market's not going to do it for you right away. And it takes a little bit of time to roll your sleeves up, do a little bit of work. And then if the change in employment markets does happen, then you may be a winner associated with that because you've got in a time where it's quite easy to buy. You're not elbowing competition away or anything like that.
Yeah. Well, I think one thing's for sure from a quantitative perspective that building approvals and housing completions are much higher on a relative basis in Melbourne compared to
Yes.
Brisbane and Sydney. And also there's far more developable land, future supply of buildings
Yep.
like houses, both Western Melbourne, far north Melbourne to some extent, far east Melbourne as well. So compare that to Sydney where there's less of that and Brisbane. Brisbane has land, but the council's politicking way too much, which kind of is restricting supply. So it's interesting.
I love that. We used the comment once on a previous episode is the incompetence of governments in their ability to solve this. Uh, we have said that Victoria and the Melbourne government actually has runs on the board, at least relatively speaking, in terms of delivering housing supply. And you can kind of see it, especially as a Sydney side. When I go to Melbourne 4 or 5 times a year. I'm like, you guys do this pretty well. There's a lot of high-rise buildings in and around the
Yeah,
suburbs.
yeah.
Well, you go to Sydney being like, there's not, it looks pretty flat. Um, just
70,000 new dwellings in I think it's Melbourne, yeah. Melbourne in the last 12 months. It's like, I mean, it's not enough, but it's the highest out of any state.
Exactly. It's per capita, per person, it's 50 over a 30-year period, 50%. Obviously, they've got more people coming in. They've had higher population growth, so they need more at home. So you have to put that context in mind. But they've had 50% more per person in dwelling completions than New South Wales or Sydney, comparing the two cities and be like, oh, is that a function of Melbourne doing really well, or is it a function of Sydney doing particularly badly in sort of upzoning land where it should be? And adding in one lens to that, again, for those that really want a Melbourne deep dive, you can check out our previous episode with the different opportunities. One concern factor is the Melbourne planning authorities. They're talking about infield development, and they have runs on the board in delivering this, so they may be able to actually deliver this better than other states. I don't know how, but they may be able to do it better. So that could create further supply. And supply could, hamper capital growth rates. Have we talked about everything? Oh, the last one I wanted to get your thoughts on, actually. We have another video coming up next week on this is Darwin. And the reason why I want to talk about Darwin is when you put it like this, 5% yields plus, low vacancy rates, increasing market pressure signal. So a little bit of supply on market coming back down and days on market falling a little bit. A lot of investors out there, there's actually not that many locations that haven't done well at all that spit out these frameworks. And Darwin seems to be spitting out some of these frameworks, particularly from an employment story as well. They've got a 4.2% unemployment rate, much lower than what they typically have. There are some downsides, but what are your thoughts on Darwin, especially with the data kind of showcasing, by process of elimination, it's not too bad.
Yeah, I think it's one that shouldn't be ignored. I know that a few clients of mine bought there like 1 or 2 years ago, and in the suburbs they bought have gone up like 20%, which isn't like earth-shattering growth. And at the time I asked them why, because everyone's different. I asked them why did you buy in Darwin? Of course they mentioned some of this short-term data that you're referring to was great. But it wasn't their first property. It might have been their sixth property or seventh or eighth. So it's one of those things. It's like, well, I only have 400K to spend. I already have properties in all these other states. Let me, expand my risk appetite and have a go at something that may do really, really well, or at worst case scenario, at least still grows double digits while sort of paying for itself. The problem that Darwin has is, of course, it doesn't have that sort of permanent growing or buoyant labor force. LNG project dependent that can be quite transient, and it hasn't really diversified itself away from that as much as a place like Perth away from iron ore. It also doesn't have that kind of psychological benefit that other regional quote unquote cities have, that they're close to another capital city like Bendigo. Sure, Darwin may be just as diversified as Bendigo. In fact, I don't think it is. Let's say it is. But then Bendigo has this advantage of it's commutable to Melbourne, right? And all the benefits from an infrastructure perspective that come with it. Darwin doesn't have that. So I think the local population is like, we've already got houses. It's all good. There's no affordability issue in Darwin. There's not a whole lot of migration interstate or international going in to Northern Territory or Darwin. So that's not pushing up house prices. And then you don't have investors sort of going there because it's a hard sell, right? It's a
Yes,
hard
yes,
sell.
that's
Anyone can, oh, I feel that people like me, I shouldn't say this, but like professionals with some level of following, we can sell anything. And, anyone will, not that that's the right thing to do, but even for the most unscrupulous course creators or buyers agents or whatever, Darwin is a really hard sell. It's a really hard pill for their potential clients or audience to
yes.
to swallow. So I think that, it's not that self-fulfilling prophecy. So I think, yeah, I personally, would I invest my own money there? Well, probably, because,
Yep.
15th, 14th, 16th property doesn't make a huge difference.
Yep.
But for a first-time investor, I think it's a huge risk of it just going sideways for a long time.
You actually touched on a really cool point. You know that housing finance data stat? Darwin, I did a video. It's outdated already. I did a video not too long ago where it showed housing finance stat in Darwin down 25% since Jan 2023. And then I'm like, I think I benchmarked Darwin wrong. Like Darwin just beats to its own drums. Jan 2023 was not the starting point of its cycle. That was a bit of a trigger point in different cycles when the rate raising turning point occurred. Darwin has had a 25% drop since then. But in the last 3 months alone, its investor financing is up like 30%. And it's really, really small numbers because, that could just be 100 investors, but
Hmm.
would be a starting point of like, hey, perhaps some agents and data, perhaps there is some investor activity starting to be driven into there that could lead to some price movement in the
Well,
future.
one thing that I'm seeing as well, and this is not to be negative to anyone else at all, but I'm finding that a lot of professionals in, let's say the buyer's agent industry, they have so many clients, they have huge waiting lists, and it's really hard to buy in Perth. It's really hard to buy in some parts of regional Victoria, New South Wales, Brisbane, Northern Queensland, wherever. And so just to fulfill their clients, they're like,
Yep.
well, we can get you something in Darwin tomorrow, kind of thing, right? So it's kind of also, I think what you're seeing is probably a product of just the amount of investor demand there is nationally
Yes.
and the fact that there's not enough good stock elsewhere. And so human behavior suggests that let's just chuck them in that market.
100%. That is exactly my summary. I use the word process of elimination, actually, being like, hey, like it could just be the last one standing in some sense, where buyer's agent is just like, I don't have access. Be like, cool, there you go. I'll go buy this. Close enough, hits the data metrics, hits the yield metrics that a lot of investors are looking for. So, this was fascinating, PK. I really, really enjoyed your thoughts. You come at it from a different perspective to everyone else. You bring fresh ideas and you're not afraid to just say it like it is. I really like the ambition element you shared with our audience, and I really hope people can take that away. And that little deep dive into suburbs, that's really, really cool as well. That's always something for someone to take away, especially with someone of your mind and caliber talking about it. Absolute pleasure, PK. For anyone listening to this that doesn't listen to PK's YouTube channel, I can personally vouch for this. It has been a pleasure consuming PK's content, and I don't consume ridiculous amounts of property content. In fact, I don't listen to most things. I do listen to PK's videos, and when I had my baby girl and I was up in the middle of the night supporting my wife while we were nursing her, I spent months during those times watching pretty much every single one of PK's videos, and I just felt like a better investor at the end of it. And I can say that for so few people who teach me so much at this point in my journey, and PK is the man that does that. So complete transparency. Go to his YouTube channel, check it out, and you will learn something. I can almost make a promise that that will come true for anyone listening here that doesn't know PK. Thank you very much.
Thanks so much, Freedom, and yeah, wish your podcast, all success as well. I think it's very rich with insight, and oftentimes people want a quick, tip or this and that, but I think they really need to take the time to consume your content because yeah, it's got the real substance, and sometimes substance isn't sexy, it's sometimes boring, like a lot of stuff that I do. But that is what makes you, kick goals. So I really encourage people to dig in and consume more of your stuff.
Yes. Thanks, PK. Pleasure.